Welcome to Dime Dive. Ever wondered how mutual funds could be a game changer in your investment journey? Let's dive in and explore. At their core, mutual funds are a type of investment vehicle consisting of a portfolio of stocks, bonds, or other securities. They combine the capital of many investors, allowing you to own a small part of each asset in the fund. The beauty of mutual funds lies in their potential benefits. They offer diversification, professional management, and convenience. Think of mutual funds as a basket of various investments. You're not putting all your eggs in one basket, but spreading them out, mitigating risk. Plus, you have financial experts steering the ship, making informed decisions on your behalf. Today, our focus will be on a unique breed of mutual funds offered by Fidelity, known as the Zero Mutual Funds. Intriguing name, right? Well, there's a lot more to it than just the name. Now that we know what mutual funds are, let's dive into the world of Fidelity's Zero Mutual Funds. Have you heard about Fidelity's Zero Mutual Funds? Yes, you heard right, zero. Let's take a quick look at these four unique offerings. First up, we have the Fidelity Zero Large Cap Index Fund. This fund aims to mirror the total return of a wide range of large capitalization U.S. companies. Next is the Fidelity Zero Total Market Index Fund, which seeks to replicate the total return of a broad spectrum of publicly traded companies in the U.S. Third in line is the Fidelity Zero Extended Market Index Fund, targeting the total return of a broad range of mid to small capitalization U.S. companies. Last, but certainly not least, we have the Fidelity Zero International Index Fund, which aims to correspond to the total return of foreign developed and emerging stocks. The best part? All these funds come with a 0% expense ratio and no minimum investment requirement. Sounds intriguing, isn't it? Let's delve deeper into each of these funds. Let's start with the Fidelity Zero Large Cap Index Fund, or FNILX. This fund seeks to provide investment results that correspond to the total return of a broad range of large capitalization U.S. companies. This means it's investing in big established companies. Think those that are part of the S&P 500. These are typically stable, profitable firms, but their growth may be slower compared to smaller up-and-coming companies. Next, we have the Fidelity Zero Total Market Index Fund, or FZROX. This one's a bit different. It aims to provide returns that correspond to the total return of a broad range of publicly traded companies in the U.S. So instead of focusing solely on large companies, this fund includes businesses of all sizes, from massive corporations to small startups. This offers a more diversified exposure to the U.S. market. On to the Fidelity Zero Extended Market Index Fund, or FZIPX. This fund targets mid to small capitalization U.S. companies. These companies might not have the size and stability of large caps, but they often offer higher growth potential. If you're comfortable with a bit more risk and are looking for growth, this could be an interesting option. Lastly, we have the Fidelity Zero International Index Fund, or FZYLX. This fund aims to provide returns that correspond to the total return of foreign developed and emerging stocks. If you're looking to diversify your portfolio beyond U.S. borders, this fund offers exposure to a wide range of international markets. What's fascinating is that these funds each have a 0% expense ratio and no minimums to invest. This means you can start investing with whatever amount you're comfortable with, and you won't lose any of your investment to fund expenses. As we can see, each fund offers a unique approach to investing. The key is to understand your own investment goals and risk tolerance. So, what have we learned about Fidelity's Zero Mutual Funds? We've taken a close look at 4 zero-fee mutual funds offered by Fidelity. The Large Cap Index Fund seeks to mirror the total return of a broad range of large capitalization U.S. companies. The Total Market Index Fund aims to match the total return of a broad range of publicly traded companies in the U.S. The Extended Market Index Fund corresponds to the total return of a broad range of mid to small capitalization U.S. companies. And finally, the International Index Fund seeks to provide investment results that correspond to the total return of foreign developed and emerging stocks. A simple strategy could be investing 50% in domestic funds, like FZROX, and 50% in international funds, like FZILX. Remember, this isn't financial advice. Currently, the value of USA-listed stocks forms about 42% of the global total. Investing in mutual funds can be a great way to diversify your portfolio. Remember, the best investment strategy is the one that works for you. So do your research, understand your risk tolerance, and make informed decisions. Happy investing. Subscribe to Dime Dive.